morning, everyone. Thank you for joining the session today. This is the Vetiva Breakfast Meeting, and it is brought to you by Vetiva Capital in partnership with Frontier Africa Reports. Today, we'll be getting an update on Guarantee Trust Bank's audited FY20 financial statements. This will be analyzed by Joshua Odebisi, our banking analyst. After that, we'll be hearing from Emmanuel Adeoye on the equity markets and Omorege Oloro on the fixed income market. Also, we'll be speaking with our media partners at Frontier Africa Reports. That will be Temple Ashaju for today, and he'll be taking us on other Pan-African updates. Before we get to Joshua, who will start off the session, would like to remind everyone that this meeting is being recorded and is also being broadcast live on Facebook. Would also like everyone to know that this recording may be shared with third parties. Regarding questions, we can't take questions after all speakers are done, but we intend for this session to last only 30 minutes in total. So if we're unable to take your question during the session, you can always send your questions to research@vetiva.com. So quickly, we'll be starting with the analysis of GT Bank's financial statement by Joshua. Hi, Joshua. Good morning.
Good morning, Chima. Thank you very much. So as Chima already mentioned, I'll be taking us through the GT Bank full year 20 results. First off, gross earnings were up 5% year on year to about 458 billion. This was thanks to a 2% increase in interest income year on year to about 300.7 billion, while interest expense was down 27% year on year to 47 billion, giving them a net interest income of 253.7 billion, which is a 10% year on year improvement. For non-interest income, it was also quite impressive. They saw a 13% year-on-year improvement to about 157.7 billion. This was mainly as a result of increases in FX revaluation gains, while fees and commission income was actually down 15%. So fees and commissions moved up from about 11 billion in 2019 to about 56 billion, which was really where the improvement came from. Meanwhile, operating costs were up 15% year on year. Now, staff costs and salaries and benefits were only up by about 1%. Looking at their statements, we saw that they had a bit of a reduction in average staff size by about 500 year on year. Meanwhile, operating costs was up 20%. Other operating costs, this was made up of AMCON charges, ICT expenses, and other administrative costs, with no single cost item having a bigger impact than the other on the overall results. Meanwhile, provisions were up almost 300% year on year to close at about 19.6 billion from 4.9 billion the year before, which was significantly higher than we had expected. But given the amount of provisions we've seen other banks take in Q4, it sort of makes sense because they took a pretty hefty chunk of their provisions in Q4 as well, almost 10 billion. So overall, this gave them a PBT of about 238.1 billion, which is a 3% year-on-year improvement, while the PAT was up by about 2% year-on-year. So this gave them 201 billion PAT for the year. Now, importantly, the bank declared a final dividend payment of 2 naira 70 kobo, which follows with what Zenith Bank earlier declared. This gives based on the bank's current price, it gives the bank a dividend yield, or the stock a dividend yield of about 10%, which I think follows the strategy that we expected GT Bank to take, based on the fact that Zenith Bank had earlier announced a similar dividend payout, and we did not expect them to follow the UBA strategy. That covers it for GT. Thank you.
Thank you very much, Joshua. Next, we'll be hearing from Emmanuel Adeoye on the equity market. Good morning, Emmanuel.
All right. Good morning, Chima, and good morning, everybody. In the West African region yesterday, we saw an upward movement with the Nigerian equities markets leading the gainers table, posting a gain of 54 basis points. And as a result, the year-to-date return of the region moderated to negative 3.37%. The BRVM stock exchange followed the Nigerian equities market, posting a 28 basis points rise. And that kept it year-to-date return a bit lower to year-to-date loss a bit lower to negative 3.97%, while the GSC following positive returns in the past few sessions, it saw itself closing in the negative territory yesterday, recording a loss of 1.28%, but its year-to-date return remained positive at 13.04%. For the Nigerian equities market now, the index closed not due to interest in the banking space yesterday. Following sessions of closing in the red, we saw investors cherry picking counters in that region yesterday, and that single-handedly led the market to a positive close. Among the gainers for yesterday in the banking space, we had Zenith Bank, which posted a 732 basis points rise above where it closed in the previous session. Subsequently closed at 22 naira, and following that, we saw investors taking position in Guarantee 2. It's improved 6.43% day on day to close at 29 naira 80 kobo. The 29 naira 80 kobo is just a bit shy from the 30 naira high price that it traded intraday. But like I mentioned, it subsequently closed at 29 naira 80 kobo. Also in that space, we saw interest in some other tier 1 banking stocks, talking about UBA and Access Bank. UBA gained 1.43%, while Access Bank also gained 64 basis points to close at 7 naira 85 kobo. So putting all those together, the banking sector posted a gain of 4.40% day on day, and that reduced its year-to-date loss to negative 10.62% from the negative 14.63% posted in the previous session. Aside the banking space, we also saw interest in the industrial goods sector yesterday, thanks to the 273 basis point rise in the share price of WAPCO. And on the back of that, the industrial goods sector posted a gain of 16 basis points at the end of yesterday's session. And other stocks as well in the region saw some positive patronage, talking about Dank Sugar in the consumer goods space, which posted a gain of 6.25% to close at 17 naira. It traded as high as 17 naira 20 kobo in yesterday's session, but subsequently closed at 17 naira. But that was still a bit, an improvement compared to the 16 naira opened in the previous session. And we also saw interest in NASCON yesterday, which advanced 3.57% day on day. Similarly, just like the overall index moved higher, we also saw improved activities yesterday. Total volume traded improved significantly by 727% to 1.4 billion units traded yesterday. But bulk of this was a result of cross-dealing in Unity Bank, which traded about 70% of the total volume traded yesterday, whereas total value traded as well also improved to about 5.8 billion naira. I think yesterday's session was about 118% above where what was traded in the previous session. And sentiment generally was positive yesterday, as seen by the overall Osher index as well as the activity levels. We also saw market breadth closing positive at 1.83 times. We had a total of 22 stocks which advanced yesterday, as against 12 stocks which closed south. Nothing other than the fact that prices are a bit really low, and that gives a number of investors opportunities to cherry pick and take position in some of these counters. So majorly, the banking sector led the stage yesterday, given that dividend yields are very attractive there due to the fact that prices have reduced in the last few sessions. So investors took advantage of that and cherry-picked counters in that space. We expect the positive performance in the banking sector to filter into today's session, especially given the fact that we saw the long-awaited result of GT Bank yesterday, and it followed a similar pattern as that of Zenith Bank, posting a dividend payout of 2.70 naira, and that is still about that is giving a dividend yield of about 10%. So on the back of that, we still expect investors to continue to take a position in some of the counters in that region. And given that we have a positive outlook for the banking space, we think a number of some other sectors might also follow the pattern of the banking sector. So we have a bullish outlook on the broader base for today's session, but we don't think that should the market would maintain its weekly year-to-date return rather, because already as at yesterday we have a gain of 69 basis points. So should the market just move in yesterday's direction again, the market would halt its six consecutive weeks of closing in the red, and would have our first week-to-date, a positive week-to-date close since the end of February. That'll be it for us this morning. Thank you very much.
Thank you very much, Emmanuel. We'll be going to the fixed income analysis soon, but I just have a question for Joshua. You mentioned that GT Bank's fees and commission increased from about 11 billion to 50-something billion. I just wanted to ask if you can clarify why we saw that significant increase, especially because I remember around late 2019 was when the regulator came out to revise their charges lower. So if you could clarify why we saw such a significant increase in the period.
Thank you, Chuma. So specifically, fees and commissions were down year on year from 62 billion to 53 billion. What was up was FX revaluation gains, which went up significantly as a result of the multiple devaluations that we saw in 2020. So no, fees and commissions were down, as you mentioned, due to the fact that the regulator has revised the structure of fee payments and charges as well.
Okay, thank you for the clarification. So next we'll be hearing from the fixed income analyst, Morege Ogogo.
Good morning, Chima. Good morning, everybody. I'll start with the money market. Yesterday, the money market was quite liquid. We saw coupon inflows of about 41.4 billion come into the system. As a result, the money market opened 268.31 billion positive. This is a marginal improvement from 193 billion positive recorded on Wednesday. As a result of the OMO funding pressure we witnessed yesterday, we saw rates remain to trade around 12% to between 12% to 15%. So our expectation for today is that interbank rate will trade higher, given that there's an FS retail auction today, and also there's a possible CRRO debit that might happen today. Moving on to the FS market, despite the oil prices recording its highest single-day loss in about 11 months, we saw the Naira appreciate in the new window. The parallel market remained flat to trade at 485 Naira to $1. The new window traded at a high of 412 Naira to $1, while closing at 409.67 Naira to $1. So yesterday, we saw a marginal decrease in I&E turnover coming from 148.54, where it closed on Wednesday. We saw it closed at $98.20 million yesterday. So we expect that Naira will continue to trade at these current levels. Moving on to the T-bills market. The T-bills market was awash with activities yesterday as players tried to offload their NTB auction winnings and other long-dated positions. We saw offers hit 6.55% levels for the newly issued one-year paper. As expected, the OMO space traded on a very muted note. The OMO auction that happened yesterday was the major highlight in the OMO space. So players just decided to stay on the sidelines and wait for the OMO auction results. So at the auction, the CBN offered a total of 100 billion across the 3 tenors. This is 40 billion more than the amount they offered in the previous auction. In the previous auction, they offered 60 billion. The CBN maintained rate across the 3 tenors for the 6th time in a row. The 91 days, the short dated paper closed at 10%. The total subscription on their end was 28 billion. The total amount that was offered was 10 billion, while the total amount that was allotted was also 10 billion. The mid-dated paper closed at 8.5%. The total subscription was 36.5 billion. The total amount that was offered was 20 billion, and the total sale was also 20 billion, while the long end closed at 10.10. The total amount of subscription recorded on that end was 283.99 billion. Total amount offered was 70 billion, and the total sale was also 70 billion. So our expectation today is that the TBS market will record a very active trading session in both the NTB and OMO segments as players try to offload their NTB winnings, while others who got prorated volumes at the OMO auction will try to cover their on-feed demands. I'll conclude with the bonds desk. The bonds market recorded another mixed trading session yesterday. We saw sell-off across the mid end of the curve, particularly on the 2034, 2036, and the 2037 maturities, while the short-dated papers, particularly the 2023, 2024, 2026, 2027, and 2029, and other long-dated papers, the 2045s and the 2049 maturities, enjoyed investor demand spurred by coupon inflows of about 41.4 billion that came into the system yesterday. Overall, we saw average rate advanced 15 basis points compared to opening levels. So our expectation for today is that the bonds market will record a very moderate trading session as investors continue to look for outlets to reinvest their coupon inflows while the market prepares for the next bond auction that is happening next week. So that's all for fixed income. Thank you very much.
Thank you very much, Omerigi. Just a quick question. So we can see, at least from the last auction and the previous auction as well, that the rates in the NTB markets are trending upwards. So if you can just give a guidance as to your expectations for what we'll see or where we'll see rates at in Q2. I know you mentioned that the CBN or the DMO would most likely reabsorb all the maturities for that quarter, but if you can give some guidance on as to what you expect rates to be in that period.
Okay, thank you so much, Iman, for that question. So looking at the NTB issuance calendar for the second quarter, the DMO plans to borrow about 399 billion. So in the first 2 auctions, they borrowed more than what they plan to actually borrow. So in the first auction that happened this quarter, they borrowed 20 billion more. In the second quarter, that was in the second auction, they borrowed about 15 billion more. So my point basically is, despite the fact that they already have a calendar that gives an idea of what they plan to borrow, it is actually not cast in stone. They might actually decide to borrow more. So also the plan or the general sentiment in the market is that there will be a gradual convergence between NTB rates and the OMO rates. As earlier mentioned, NTB OMO rate for the long-dated paper closed at 10.10%, and NTB is currently at 7%. So it might take a while. I see a gradual convergence between both rates eventually, maybe before the close of this year. But in the second quarter, I think we might just see rate increase by another 100 basis points, because the reason I'm thinking this way is basically because the liquidity of the system in this second quarter is not as much as what we had in the first quarter. So we might not see that aggressive demand in the NTB space. And also what drives this rate basically is how aggressive people bid at the auction. So people might become conservative given that the liquidity in the system is not so much. And for them not to lose at the auctions, they might just decide to throw in conservative bids. So I think in the second quarter, give or take, rates should advance by like another 100 basis points. But towards the close of the year, we may actually see a convergence between NTB and OMO auction rates. Thank you so much.
Thank you very much. Thank you very much, Omarige. I see that Dakpo has his hand raised. Please go ahead, Dakpo, if you have anything to add.
Okay, thank you. Just as an addition to what Omorige has said very quickly, you also start to see the macro fundamentals and start to ask questions. You're looking at inflation. We still see and know that we are not at the peak yet. Also, from what Omorige noted, government
Apologies,
policy.
Dakpo.
Sorry, can you hear me?
Not very clearly.
Is it better now?
Yes, thank you.
Okay, so I said that looking at inflation, we start to compare macro factors as well. Inflation is not at its peak yet. Last print was 17.33. There's still room for an uptick there. And you start to wonder whether CBN will start looking to tighten at the MPC, pretty much looking at the fact that we're out of recession. Inflation is ticking up and biting hard. So again, that makes a case for rates going up. You also look at things like they've been taking more than they offer at the auction, as Omorige noted, and that speaks to again government that needs or is under pressure to be funded. There was something about ways and means a couple of months ago, and the CBN looking to regularize it. So maybe there's no direct access to CBN for funding anymore, and we are seeing that reflecting in what they are coming to borrow in the market per time. So again, that points to Q2 might be, another session where we see rates ticking up. You also had the fact that FX is still a thing of concern. We've seen the bonanza. There is no, major there is no improvement, as it were, to the parallel market. Still trading 485 levels. So again, poses a question whether CBN wants to entice these people and even jack up OMO rates. When you again see a convergence between NTB and OMOs, you start to say CBN might need to again push in further premium. So everything is pointing towards, like we've always noted, rates might still see another further drive of uptick in the second quarter. I think that's just what I'm looking to add to it. Thank you.
Thank you very much, Dakpo, for the input. Next, we'll be hearing from Temple Ashaju on Pan-African market updates. Good morning, Temple.
Good morning, Kim. Good morning, everyone. We'll start off from the eastern part of Africa, where we all know that the president of that country has now been announced that he is dead, and he died in an hospital in Tanzania. He's been away from office for in the last 2 weeks, and we understand that the vice president, who's a woman, will be the succeeding president. Now, I'm not sure if she has been sworn in as the president, but she will be the first lady or first woman to become a president in Africa or thereabout. I'm not too sure if I'm right about that, so please. So moving on, Kenya's got the Geothermal Development Corporation there secured some $5 million grants from African Union. That's to help them commence the exploration of the Paka geothermal projects in a major part of that country. It is expected to add some 100 megawatts to Kenya's electricity supply. And of course, the Kenyan Central Bank or Commercial Bank, rather, Kenyan Commercial Bank, KCB, got a net profit of 22% decline basically in loan loss provision. And that is based on the slowing economy. Western part of Africa now, headlines is first from Nigeria. This relates to Nigeria, but it's more Pan-African and it has to do with Airtel. The Rice Fund invests some $200 million in Airtel subsidiaries. And we understand that these will go to the African units. The process will actually be used to slash Airtel's debts and to invest in the developing network and infrastructure across 14 countries in Africa. And North-South Power also signed some 25-year concession of hydropower plants, and that relates to the Gurara hydropower plant in Kaduna State. Apple Group, which is a PR company, and Invest Africa Limited are partnering to promote trade in Africa. Senegal's inflation figure came in yesterday. It was at 1.7% year on year for February. That's higher than 0.9% that it had for January. Ghana, we understand, is trying to raise $5 billion this year by way of bonds, tapping the sovereign bond market. Analysts are saying that that may not be successful. We understand that they are beginning their roadshow today, and it's going to be a virtual roadshow. But analysts are really bearish on that. For southern part of Africa, wholesale trade sales dipped by some 7.1% year on year. Rockwell Diamonds Incorporated also completed the mergers with Bristol. The outstanding common shares of Rockwell will now be held by the outstanding common shares held by Mark Bristow, who owned the stake, a major stake in this particular company, has now been cancelled. And of course, each redeemable preferred shares are expected to be redeemable going forward. That's for minority shareholders. Finally, is the northern part of Africa, where Fitch says that emerging markets, Europe and East Africa region, will see higher reported NPL ratio in 2021. They released the report yesterday titled What Investors Want to Know, Loan Moratoria in Emerging Markets, Europe and East Africa. And they're pegging this forecast on the expiration of the moratoria and loan forbearance programs and the negative or risks that it poses to asset quality and forbearance measures going forward. Bank of Cairo, they're getting I think 1.5 billion Egyptian pounds for SME lending. That fund is coming from the European Bank for Reconstruction and Development. And we understand that Misr Bank says there's no plan to merge with Misr Capital and CI Capital in Egypt. Those are headlines for today. Thank you for listening.
Thank you very much, Temple, for the update. We can now take questions, but before we get to that, just a quick announcement. On Wednesday, the 24th of March, 2021, Mr. Adebola Olatubosun, who is a senior analyst, investor relations at Adova PLC, will be joining us on the Vetiva breakfast session, and he will be speaking on the implications of a subsidy regime on the downstream sector. That will be Wednesday, 24th of March 2021 at 8:30. So we have a question for us in the chat. Sean says, just to follow up on the question earlier, I think this is to Joshua. You mentioned that GT Bank's fees and commissions income dropped in 2020. Is this drop consistent with 2019's result? And is this in line with your expectation for 2020? Also, what's your outlook for fees in 2021? I think we have about 2 minutes for you to answer, Joshua.
All right, thank you. Just a quick one. Thank you for that question. So, as I mentioned before, due to the changes that were made by the CBN, obviously fees and commissions going forward from 2020 onwards will be significantly lower. And because the banks are also paying higher fee expenses, net fee income will also be lower. So overall, the expectation is that we will see lower fees, but in 2021, an increase in activity, either through newer channels or through increased promotions or more customers using the platforms, we would see a slight improvement year on year, but we will not see anything close to 2019 levels just due to the changes made in the structure. I hope that answers the question.
Thank you very much. I hope that answered your question, Sean. So that concludes the session for us today. We hope that you had we hope it was interesting for you. We encourage everyone to continue to stay safe, and we wish you a great day and weekend ahead. We hope to see you on Monday, same time. Thank you.